Okay, welcome everyone. We're going to cover this with the weekly stock market charts, just trying to find anything that looks interesting on the weekly charts, and we'll really kind of wrap up how we ended on Friday. This is stock market technical analysis, and if you're new, leave me a thumbs up. I do value that. That does help the channel grow. And if you've been with me for a while, thank you. I do appreciate the interaction. So let's get right into it. And we'll start off with the SPY. So the SPY, basically, this is the weekly chart we're looking at. And, on this weekly chart, basically I've got a trend line off the March lows, March 2020 lows. Not a ton of reactions on that trend line on the weekly chart, but it's about as good as you can make it. I could probably also draw something out like this maybe, just to get a couple reactions like there. A trend line there, you can see we've got three weeks where we had reactions there. We had another one there, and then 2 weeks there. So that's potential for some sort of a bounce, and that would mean that the SPY is likely heading down towards 351 or depends on when it gets there, of course, right? But down there, and then maybe we'll get a bounce. I do think, and I'll flip over to the daily real quick. I do think we're heading lower. You can see here on the daily time frame, we've got this bearish rising wedge pattern, and we started to break, a couple days ago. So more selling. Ended the week on Friday with down near the lows. So no signs right now that the selling's over with. Where are we going next? Well, you can see we had a couple reactions right in here, kind of this base support line. So I think we're probably heading down to, about 362. We'll probably get there on Monday. And then maybe we'll have a bounce there. There might be a little bit of a bounce right there. So yeah, again, when stocks fall, they do fall a lot faster than they go up. But they don't just fall straight down. The COVID drop, if I roll back to here, this kind of straight drop down, that's pretty rare. You'll see that in a bear market, but you're usually going to see this towards the end of the bear market when it's just panic selling and it's just everyone's throwing in the towel and capitulating. That's when you'll see these kinds of moves. And oftentimes you look for a bottom near those kinds of moves. So I don't think we're going to see this in what I believe is potentially the start of a bear market, and I think we're gonna work our way lower. It might take a year or so before we start to see some panic selling like that, and it's just going to be a series of lower highs and lower lows, a trend to the downside, not a collapse or a crash. I know I put crash sometimes in my videos. Again, it's a crash is basically this kind of thing here. I'm thinking more of a bear market, which is really just a slope of hope is what it does. So it goes down, bear market rally. It goes down, bear market rally. So you're going to have these really impulsive, sharp rallies along the way that are going to be, probably great to trade to the long side. Now, obviously, it's very early to say that we started a bear market. It's really hard to make that call. But you got to make the call at some point in time, and preferably you make it before it's obvious to everyone. So that's the point. I'm trying to make a call. I'm trying to anticipate where the market's going, given what I see in the charts, and I'm trying to give people a heads up before it doesn't do anybody any good if the market's down 20% and I say, hey guys, I think we're in a bear market. That's just obvious. It doesn't help anyone. So rather, I try to look at the charts and see what we got and then anticipate that. SPY, we did have this bearish engulfing candle. You can see there that's an outside day as well, outside week, sorry, because you can see where we basically traded above the previous week on the top end just slightly and closed way below several weeks worth of price action. That's a month basically. That's a month. The last 4 weeks there were wiped out in this 1 week. So again, if we have another week of impulsive selling, which I think we probably will, because this thing's just getting started, then we could easily wipe out. I could see us easily wiping out all these gains and probably getting a bounce. Well, it falls in with that trend line, but maybe down here around 350 or something. So look for that level too. There's two levels that I'm going to be kind of eyeballing to see if we get any kind of reactions around. Again, it's about 360, 363 or so, and then 350. We'll just call it 350. This is a weekly chart, so. But again, if we get another bearish candle, we'll wipe out all these gains, which would be several months worth of gains potentially wiped out in 2 weeks. And that's what happens when you're near the top end of a rally, when the momentum is dying, and when that momentum shifts, it's impulsive usually in the beginning at least. And so I'm looking for that. Let's flip over to Qs, because this is the one where I feel like this is the indice that broke the camel's back this week at least. SPY broke down a couple days ago, and we pointed that I pointed that out, but then Qs hadn't broken down yet. Well, Qs did break down this week. If we let's look at the daily real quick. There's the breakdown, and this is coming off the March 2020 lows, and you can see reaction there, a couple reactions in here. We put in this bearish rising wedge, shot to the upside, which is something that, when I see that, again, this is just when you see a bearish rising wedge pattern, the market makers love to, trick people. So they'll ramp it to the upside and then bring it down. Again, they're looking for liquidity. And this is just how the market dynamics work. A big institution, a big, market maker that wants to take a large position can't take a large position into a trending market. So if they want to get short something or long, ideally they want to create a lot of buyers. Like, let's say in this situation, they want to get short. Okay, so break it bullish to the upside. Everybody gets bullish, and then short into that volume or that liquidity that's created. You can see down, look at the volume down through here, how, there was kind of a pickup in volume in this price action up here. That was likely, institutions or market makers taking, that short position, buying into those buyers. People are trying to buy, they're selling short. They need that transactional liquidity to take those large positions. If they try to take a large position into a trending market, it just ramps the price so high that they just get bad price allocation. So the better way for them to do it is to, oftentimes create that liquidity. So that's why you'll see stop raids and things like that, where they drop it down and run people's stops so that the stops are firing, and then they're able to take those positions into that liquidity. So Qs broke down on the daily, closing near the lows. Yeah, we could backtest some more. That's completely possible. We could come down, hit maybe this level of support right about here at like 306, and then bounce and do a back test. But honestly, because this market is so offsides with on the long end, what I mean by that is everyone's position long, lots of leverage longs. Everyone's bullish, extremely bullish. This GME thing is just a signal of that. You're seeing just kind of, just no cares in the world call buying. Doesn't matter about the valuation, call buying. It just matters that the price is ripping and exploding, and some people are getting rich. Some people do get rich in those moves, but I suspect there's going to be a lot more people that lose money. There will be more wealth destruction, or it's not really destruction, but consolidation. So the people that got into GME early consolidate all the money, and then a lot of other people are going to lose money. So, and that's why I think this market is really offsides with just bullishness, extreme bullishness. Let's take a look at this fear and greed index. I glance at it every now and then. I don't use it per se because it can tell you that there's some extremes, and we've shifted. So we went from greed, and I can't get the history, but we've basically been in greed and extreme greed for quite a while. And this last week there was a tipping point, or a inflection point, where we shifted, and that's what we saw in the price action as well. The momentum indicators on my charts have been showing that for a while, that we're going to come to that inflection point. We now saw that in the price, And we're now hitting fear. So obviously stock price strength, we still have extreme greed there. But the one that I want to hone in on, and you can just look at this yourself, is the put call options. So this, you can see the put to call options right there at 51.8. And we recently, back in November, and we were at 0.39 put to call options, which was everyone was buying calls and there was a very low put accumulation. And we're starting to see that shift now where there were puts being purchased, and we're starting to see that scramble that I talk about where all of a sudden certain people realize that the trend has shifted, and we get that mad scramble for put buying. And we saw that in the VIX. Here's the UVXY. This is what I was talking about when I was saying that is, when people first realize that the trend is changing, there's that mad scramble to buy put protection, and the VIX basically measures the amount of puts being bought in the market, and you're going to see that impulsive move higher in the VIX. And UVXY this week from here it was up at the high up 45%. All right, and I pointed, I've talked about that it looked like a good long. We had bullish divergence here in the daily chart on the PPO and the RSI. So those both look good, confirming that we're going to get some sort of an upside break. We kept holding in here in this range and just doing these little slight dips and then recovering. So this is a bear trap basically. When you dip below, everything starts to look like it's going to break down and then pop back up and recover. That's usually when you see that. That's where I like to add to a position, because it signals to me that was a bear trap and we're likely to go higher. So we did that, and then you get that huge rip closing up on Friday, about 9%. No signs here that this thing's done rolling high, moving higher. So I think likely next week could be a pretty brutal week. We're likely to see the VIX really start to rip higher, and we'll start looking, I'm going to start looking at selling some of my volatility into that strength. So where am I looking for this thing to go? Well, I think we can get up to 23.42. We'll probably get a reaction there up at 23.42, but I would say that's a pretty likely area. We break above that, I've got 29.20. I don't think we're going to get much higher than that, but we could. You never know. And then above that, about 46.43, and then above that, we've got 68. I think it would be pretty low probability to get, especially in a week. We're not going to get all the way up here. And I'm not even sure we're going to get back up to these highs, again. Again, in a bear market, volatility can fall in a bear market. The volatility just spikes in that initial surge to reposition. All right, so when everyone's long calls and long stock, and they all of a sudden feel that they need put protection, there's a mad scramble, and everyone's gobbling up put protection. And then you get that spike into volatility. And then once everyone's positioned for risk and some downside, then volatility starts to subside and the VIX can start to come down. So again, I use this. I sell. This is kind of my shock troop, basically. I sell. We get the initial surge in volatility, sell into that. That's adds some extra icing on the cake for any kind of short trade that I have on. And that's what I'm looking to do. Would I want to buy? I don't know if I'd want to get in right now. Maybe if we get a pullback down to 1277, again, the place to be buying this was down here, and I was talking about it for quite a while. So this, if you just accumulated like I was doing these things for the last month or so, that was a pretty nice week last week. IWM, you can see we closed the week. We broke trend. I can't really make a trend on this. That, I could connect. If I come off I could move this and maybe do something like that. And that could be valid, that trend line down there. But again, I think we're coming down to it, is the point. So we broke this really tight price channel here, impulsively broke. Now we did break it here as well. This was kind of during the holidays, light volume. So that was a bear trap for sure, and this could be a bear trap as well. Nothing says that it can't be, but as of right now, looks good to the downside. And something's a little different, than versus this time back here. We're seeing volatility spike. The only thing we're not quite seeing, and I'll get to it here in a second, is the dollar and bonds. So I want to see that. That's definitely going to make me feel better with any short positions. But IWM looks good. Looks like it broke. Where's it going? Well, you had some reactions right here, so I think we're likely to get a bounce right there about 193, and then probably potentially this trend line down here, down at whenever we hit it. Looking at the weekly chart, you can see bearish engulfing candle. So now you look for confirmation or a follow through week with more selling, but bearish engulfing candle. We engulfed the last 2 weeks. This one was definitely more bullish than the others. SPY broke a few days ago. Qs broke. IWM was kind of hanging in there, and then on Friday, I think it really started to break down. Yeah. Well, it actually broke a couple days ago, but it was kind of doing kickback rallies. It seemed relatively strong, I guess, at the time because the others were selling off, and this one was kind of doing some kickback rallies. But again, it's following the large caps. Okay, so here's the bonds, BND, and we've got TLT. We'll look at TLT. That's the one I've been kind of looking at. So bonds were down a little bit. Again, you have to realize the Treasury market is completely manipulated by the Fed. They are buying bonds. This is the long bonds, so not as much, but they're in there buying bonds. So it's not, the bond market doesn't give the best signals like it used to. Just because of the manipulation that's in there. But again, you would expect that there would be some institutional buying of bonds. I think there's the potential for bonds to, go all the way back up to the previous highs up here at like 172, potentially higher. But there is that potential because bonds have been selling off during this risk on rally. So now if it's going to be risk off, bonds can rally. What do we see in the long bond here? How we closed? Well, we closed down slightly, but it was really the price action. It was kind of back and forth actually, pretty choppy really on Friday. There on that's a 2 hour, 1 hour, pretty choppy. So yeah, I don't know. We'll have to see. Wait, I'm looking for a rally in bonds. I'm not going to trade the bonds. I don't think. There's other things to trade, and with the manipulation, it's just not my favorite spot, but I do use it for a signal. Gold was interesting because of the kind of the hype from that Wall Street bet thing they were talking about. They're talking about buying silver. The silver market's a little larger than those small stocks that they're hitting. So it's going to be I just don't think they have the capital. But, if they get the rest, there's a lot of people interested in silver and gold mining stocks. I'm one of them. So, if they get the rest of us to jump into it, then, that could potentially affect something. But gold ripped higher and just faded down. They sold it right off. So again, gold keeps getting rejected. It doesn't look bullish to me yet. I'm looking for lower prices. I'm looking for prices down here at 1750. Maybe we just walk this trend line all the way down over the next few weeks or whatever months. Have a slight, maybe we just start to plateau out here, have some sort of, drop down below 1750 in this area, and then get that pop, and then we start the next leg higher. So that's really it on that. Gold miners, I told everyone I bought this PAS on Friday, and I did. I sold a little bit of it just on that pop that we got, because I'm just not seeing it in, I'm not seeing the move yet in the metals. Could be there. Maybe it's just there in silver, but we'll wait till next week. As of right now, I still think lower prices. Financials closed a new lower close on the weekly chart, slightly lower than this previous dip, and breaking that support line. So if I go back to the daily, roll back to 2011, there's your uptrend line. This is the bull market in the financials, really since the Great Recession. This is the trend, the cleanest trend that can be made on this chart. And you can see held it, several tags of the trend line support. There's another one. and we broke in the COVID drop, back test, and then an overshoot. So right here we were back testing a little bit, ramped up, looked good, everything looked bullish like a breakout, and we've come back down and we're back below it now. So that's not a good sign. That's bearish, especially for the fact that you had a breakout. You know, you got to think back to the emotion and how the chart looked in this area. When I saw it, I was like, you know, this is a breakout, but I think it's going to be a false breakout. That was what I was anticipating, but it was a breakout in the chart. And, you know, you can anticipate all you want until you see it. You don't have it, but it was a false breakout. And basically, that was priced into the PPO here. We had negative divergence on the PPO. So look for lower prices is what I'm looking for. Gap fill right down here, very likely at this point, I think, down at 25, about 25.50. Just to back up the tech breakdown, here's the XLK. So this is everything except for Amazon. And you can see here that March 2020 lows, tagged it right there. And that's really where the trend line was established. We also had this trend line right here that broke, but we established a trend here, walked up, tagged it all through here, and then we broke. So not a ton of reactions, but it's the only reactions or the only trend I can really make that makes much sense, that hasn't broken down, or that had not broken down up to this point. It is now broken now, and that's pretty impulsive. That's a pretty impulsive breakdown. Negative divergence right here on the RSI and the PPO. So pretty much we had that negative divergence show up right through here. So all this price action, this is where the negative divergence started to show up, and this is when you key on these things. We didn't have it all through, you know, this wasn't divergent highs through here, but we did have it right through here. So once we start to get that shows that we're likely to see a trend reversal. Now we see the trigger or the sell signal on the chart, and I think we're heading lower. Okay, let's take a look at energy and see how that closed the week. You can see. Let's flip over to a weekly chart just to get a quick look at that. So yeah, selling for the week. We basically hit resistance right up here at 44.80 area, and 2 weeks of selling since then. Going over to the daily, you can see just another down day closing at near the lows. This was a little kickback rally here, but the trend is clearly down in the short term. Rolling out to the longer term, you could say in the longer term we're in an uptrend. If you want to go back to March 2020, we are making a series of higher low. Well, no, you can't quite say that yet because we haven't made a higher high yet. So where do I think this is going? It's kind of a sideways action actually. I think we're likely to get down to this level, about 37.60. That should come pretty quick next week. And then ultimately, I do see this level down here at 34.20 as well. You've got kind of roll out here. You can see several reactions through here, and then we tagged it from underneath a couple times. So I think we could get down to that area, 34.20. I'm likely to probably start to close out my oil shorts. I've got a couple on, and I'm likely to start to close those out as we come into these support levels. I don't expect oil to be a longer term bearish move, but it could be. Who knows? But I don't know. We'll have to watch like what gold does. Gold's going to be kind of a tell as well. And there's likely to be some more oil demand when the economy comes back online. Oil demand should increase. So, that's kind of what I'm looking for on that one. All right, shop. This one's kind of interesting. Here's the daily chart. We have this big sideways trading range that shop was in, and there's a breakout right there. So that looks good as a breakout. Pretty impulsive, especially on this day right here. Man, that was at that moment in time. If you were long this thing, I think you were extremely bullish. But I wouldn't have been, or I would have put a higher weighting in the fact that the momentum indicators were, they were showing negative divergence. So clear negative divergence right through here, and that means you have a higher probability of failing. This breakout has a higher probability of failing. And so then it came back down, And again, you see where we closed. So we're still kind of in the area where it could be holding a support and you could rally. I think it's more likely, given that the market and tech sector is starting to break down, that this breaks down as well. And we go down to the bottom of this channel, down here at about 887 or so, somewhere in that area. That would be a drop from where this is at of about 20%, 19% or so. Seems about right. Oh, and quite possibly lower on this as well. If you start to see we start to head down to the bottom of the channel, there is, we could easily get down to this lower trend line. This is coming off February 2016. So this is kind of the bull market in this shop stock. And there's the trend line. So you can see I've got an alert set, obviously looking for a breakdown of that, which would be a sell signal. But yeah, if we break this lower trend line, then I think we're heading all the way down to this the longer term bull market trend line. And that would be a drop of about 40 to 50%. Yeah, probably about 40% by the time you get there. I think there's definitely a probability there. But we need to see more selling and start to drop down into this, back into this price channel. Okay, I want to cover this apps. I did take a short position on this on Friday, right at the close. And the reason why I'm anticipating a breakdown. Now, this is a higher risk trade because there is no technical breakdown of price support. So we could easily gap up on Monday up 10%. This thing, when it hits this support line, it seems to just rally like 10% off of that. So obviously there is risk there, but with the markets starting to break down, I'm anticipating that this is going to go with it. And so here's your trend line. This is coming off the March 2020 lows. Nice clean daily trend line here. Negative divergence on the PPO daily and the RSI daily. So we've got the momentum indicators that I like to see. We've got a clean trend line, very easy to spot. And you can see right where we closed, we were selling off several days and we closed on Friday pretty much right at that trend line. When this thing breaks, it's likely going to break with a gap down. And that's what I'm anticipating. I think it gaps down on Monday, but obviously higher risk because you don't have that sell signal. We haven't broke the price support, so we're at support. This is where the buyers should step in. But again, with the market starting to break down, I think that this one gaps down on Monday. I'm just trying to front run that a little bit. So if it does gap down, it will likely gap down and then sell off pretty impulsively. So it could be a pretty big down day if this thing breaks its price support. Until then, we'll see. And the way I try to mitigate the risk, because it is a higher risk trade right now, is I take a smaller position. So I took a starting short position. If you get the gap down and that sell signal, you can, it depends on how far it gaps down. If it's just barely gapping down, then you could add, that would be an actual sell signal, provided you get the daily close at least. And you could add to a short position or start a short position, obviously. So I'll probably add to a short position if we get that sell signal. Yeah, that's how I'm doing that one. Here's AMD, and really AMD, just look at this longer term trend line. This is coming from 2016 kind of trend, and you can see nice clean daily trend line. What are we doing now? Well, recently we had this kind of sideways range. I marked it out here. Broke to the upside, and we've failed basically, and we're now heading back down into that range. So, I think it's very high probability that we tag this trend line. I don't know when or where, but I think we're going to hit that trend line probably pretty quick. And then we'll see. That will be longer term support. So that's where the buyers would want to step in if they were going to step in. I pointed this one out. This is copper miner, Southern Copper. Again, I'm seeing signs that this whole reflation narrative is not going to play out, and then basically we're going to have another pullback in the market. Whether it's a bear market, that's really hard to call, but I think we could just go sideways. We could have a big pullback and then just go sideways for years. Who knows? But I think the copper narrative is part of that reflation narrative, and it looked like it was starting to crumble. And so basically negative divergence here on the RSI, where we made an equal high on the RSI, not a lower high, but an equal high. That's still negative divergence, And the PPO, yeah, it's got it right there as well. Kind of an equal high in the PPO, but on much higher prices. So you can see here, this was your RSI, and then we made this higher price and an equal high, not a higher high. Usually when you want to see an uptrend, you want to see enthusiasm and momentum increasing, so you get higher highs in the RSI and PPO on higher prices, but this is not that. So then we mark out the trend line. There it is on the daily. There's your breakdown and a sell signal. You can see the sell signal came right here, basically. It started to break a little early, but again, my trend line could be off just slightly. But that's obvious breakdown right there. You have a gap down, a little bit of a kickback rally, and then boom, the trend, which has just started, resumes to the downside. So little rallies will be sold into is what it looks like. You know, it's a sell the rip market right now is what I see. And I'm all over the place, but just kind of running through all my charts. The daily or the dollar DXY here, we did not get any kind of breakout yet. So that's kind of the final thing you want to see is the dollar starting to break higher. I think it'll come next week, but until we see it, you know, I'm looking for 90.71 on the DXY to break higher. I'm also looking at the futures, the dollar futures. They closed right up here at the top of the range, which to me looks, let me go to the hourly here. Looks like it's, you know, we keep whipping through it. I probably can raise this level slightly, maybe up to here, just to give it the benefit of the doubt. I mean, you obviously have way up here. We could just leave it all the way up there, I guess, and just see if we get a breakout above this, basically 91, but 90, 93. You get a break above that, and that's a clear breakout of the dollar. Citibank continuing to sell off, down another, almost 4% on Friday, closing near the lows. So again, this trade continues to work. From the hourly, or here's the daily, sorry, you can see, we hit our resistance right there. And it's funny how, I had people telling me like, oh, did you stop out of Citi? Did we get out of, when do we get out? Because that's what the move is intended to do, is get you off your short shares. If you're short Citi and you've got all the technical setups for a down move, they do little whips like this where they run. This was a stop rate, and they're trying to get you to stop out so that so that they can get a better price and take your shares from you. But again, so I set my stop all the way up here. This looked like a good area to stop out and just say, okay, I guess I'm wrong up here at like 70. It was about 70, 80, and I told people about that. That was where my stop, and sure enough, that resistance did hold, and now we're selling off. This one's down, from the high, down 15, 16% or so, and so that continues to work. Where are we going? Well, we got this gap right down here, and I think we're heading straight to it, basically. 53.44. Likely get a reaction or a bounce there. Now that reaction could be a tradable reaction where you get a bounce maybe all the way back up to this support line. So that's why when you start running into your supports, as a short, as someone who's trying to short a stock, you want to start covering some of that, taking profit, and that's what I'm looking to do. Scrolling out a little bit, if we break that level, that 53.44 area, then I think we're heading down to 49.06. We break that level, I think we're heading all the way down to the March lows, basically, of 38.43. So these two up here are the higher probability trade areas, and down here is, kind of a, that's likely if we're heading into a bear market, we'll get down to there, which is possible. Okay, it's gone on long enough. I'll wrap up here. So that is kind of the end of the day recap. I'll just get that out there. If anybody wants me to cover a stock that they're looking at, or if they see a trade idea, leave it in the comment below. I'll gather a bunch of those and do a subscriber stock pick video when I have enough to look through. So leave those in the comments below. Leave me a like and check out my trading course if you guys haven't done so. The link is in the description of this video. And I'll catch you guys next week.